there's so much going on in the oil market. Obviously, incredibly important to Canada's economic growth and our economic stability. But here you've got President Trump intervening again, like he has in many other sectors, but none more important than this. That's why I'm so happy to get Doug Bartole on with me, In Play Oil, who's been doing very well. Doug, do you consider what you've been hearing and reading about with Trump saying, hey, I want $50 oil? You obviously take note of that. Are you worried about the impact?
Uh, it's not reality, so I'm not worried about it long term. I mean, short term, I think anything can happen, but it just doesn't make any sense. I mean, $70 is the new 50, right?
Mm-hmm.
I mean, prior to COVID, like shale gas or shale oil break evens were $45. Today they're 65 or better, right? And so 50 was kind of where the minimum had to be to keep going steady at 45. Well, guess what? It's 65 now. You got to have something higher than that for them to be wanting to drill in the U.S. So his policies are contradicting each other, trying to get OPEC Plus to put more on, and telling drill baby drill. But again, the break evens speak for themselves. I mean, since COVID, the inflation has basically risen the cost to find a barrel of crude now. So it's again really difficult to see how that's gonna work for any length of time.
Well, that's exactly what confused me. Is that we took his comment that he wants it at 50, that he was serious, he was sincere, and I'm going, but wait, 10 minutes ago you told me you want to be self-sufficient in oil, as an example, including from Canadian oil, and I'm going, well, you're not going to get any drilling. Which part of this equation is difficult to understand. It's not worth it, in many of the different areas to start drilling it at $50, $55, or as you've just said, you better get up to 70 if you want to at least encourage, companies to make the choice. I mean, I'm sorry, I'm going on, but because wasn't that the mistake they made? They kept drilling back and say 214 or whatever, the cash flow went down, didn't get the market for it.
Oh, you're exactly right. Right. I mean, the industry was boom and bust all the time. It was growth for growth's sake, right?
Yeah.
You got to remember, the U.S. went from 18 million to 13 million barrels, like hyperbolic production growth, and we've seen it through the times. But the problem is if you get the market oversupplied, right? You're first of all low prices, you oversupply the market, then you get the bust, right? And the pricing comes down. The high prices, of course, cause demand destruction. You oversupply, it's a boom bust phenomena that we had to get out of. And after COVID, we did. Like, this industry is starting to run much better businesses. What is our key thing is an in-play oil. Yeah. It's not even growth of barrel oils. It's focused on free funds flow. I don't care if you're in-play oil or ExxonMobil, we're all talking free funds flow, right? We're not talking growth. The growth for growth's sake of production is not part of the business model anymore. So, it's, again, doesn't add up to what President Trump is saying.
It's such a key point to get, though. It's the business approach. The business model has changed completely. Some lessons learned, as you say, have put the industry on a much more stable foundation, and that they guard their cash flow. They're careful with it, and they'll look out and they'll go, this is an environment, I'll keep my powder dry. So presto, is it a case of, I know it's simple, but low prices create higher prices in the end because nobody wants to increase supply?
Well, yeah, as long as demand's there, and if demand grows, which ultimately will get back into a growth mode in the world, mm-hmm. And we get rid of the extras. Once we get rid of the extra OPEC plus curtailments, like, the gloves are off. I don't know where oil's going, right? We're going to have a problem, and it would be so much better in my mind to be sitting at $75, $80. Like, let's face it, if it's $75, $80 all the time, there's no more inflation, right? And I think the world can handle $80. The world can probably handle $90, but it's the up and down that causes the problem. And that's where it sits. And so hopefully, it figures itself out, and it always does, but I just hope it's sooner than later.
It's interesting. That's why I love having somebody on, direct responsible in the business with in-play oil, making investments. You made a a major investment going back just a short while ago. I'm just interested how it's changed your decision making, or obviously it's just part of that decision making thing. And I'm wondering, does it impact smaller companies more than bigger companies, or vice versa, or what's the sort of landscape? Because it's easy to say the oil industry, but that's many parts of that industry.
So, it depends on how big. And some of the bigger guys are integrated, so they're making on the refining end, and if they're buying cheaper oil for the refiners, right? They make a little there. Like, so it's different. The other piece of the puzzle is like the large companies, the large caps, they're getting bought by index funds. They're on the radar of big funds. We're not. Like, we're generally heavily retail focused, and the institutions, resource institutions, have disappeared, and the generalists generally have not come down cap and liquidity levels to our level. So I think it hurts us more because we just don't have as much eyes on us, and where the large caps continually have eyes on it. When things look good, they're going to those funds first. But the good thing we'll get torquey, right? It's just like 21. Like, if you were not invested in the oil industry in 21, you were going to be well behind the return curve as a fund. Like, for example, we were up 960%. Like, so the funds always come back. I always say they're kind of like sheep, right? Once they see, they don't want to be behind the curve, and when things are looking good and we're going to have $80 oil for the next year, 2-3 years, that's when they come back, and that's when we see multiple expansion on our cash flow multiples and things. So, but we're going to be like, we tend to be the last. But in the meantime, that's why we pay a dividend, and we're paying people to wait and be patient with us, with the industry as we go. But it is definitely, I think it's harder on the small intermediates.
And the other thing, of course, you're dealing with, and I want to finish with this, is that you're dealing with not a change in government. In fact, maybe the oil industry wished there was a change in government. There wasn't. I put out something the other day where Mark Carney had promised, the biggest transformation of the Canadian economy without a single detail. And I don't believe there was a single voter who could have given me a detail. But obviously, in the past, the oil and gas industry has not been supported by the federal government. It's been restricted by the federal government, restricted by, Mark Carney has said he's not repealing the the pipeline bill, which is sort of anti-oil. What does that mean to you? Does that mean you just got to step aside and do business until you see how it sorts out? I mean, there's a lot of information that you need.
Yeah, I mean, you know what, like, and that those policies hurt all of us, like, large and small, and it hurts investment in Canada. So again, it's the same thing, right? Like, we trade lower multiples than the U.S. counterparts. We have lower debt than them to boot, lower leverage ratios, but we still trade at lower multiples. And of course, we get the benefit of our weaker dollar because we sell our oil in U.S. dollars. But it doesn't matter. I mean, their policies have not helped us. But I mean, we just got to keep chugging through and fighting that fight. And I mean, again, I think our premier is doing a good job with that on many fronts. I know who we elected. I mean, I guess I'll say it's change, but I don't know how much change it is, right? That's where the problem is. But with the tariff threats and from Trump and everything there seems to be a lot more unity within the country to get resources to other people than the States. Now, does that get through to that
policy?
With this government? That's the $1 million question, right?
Well, yeah.
I think I was talking earlier to some guys, and bottom line is the proof will be in who he puts in his cabinet in some key positions in our minds here.
Well, obviously you and the rest of the industry is going to keep a close watch. But, it was funny. I'll just finish with this just because I had to smile when the immediate announcement of the tariffs came in the early February. And people who had opposed the oil and gas industry and fought hard against it, all of a sudden were saying it was our most important weapon in the war with Trump. I predicted that, I think, that it would last 10 minutes. But yeah, I mean, it's a wait and see attitude, but that does not benefit an economy that is already sliding, capital investment problems, competitiveness problems. So I would think, they have a huge, what I think is not understood well. There's a credibility problem. We can be as hopeful as we can, but would you believe the guys? It's got to be from Missouri. You got to show me at this point because of that track record.
Oh, yeah, exactly. You're bang on. Like, we'll see. You know, I mean, we're hopeful, but right, it's good. Like proofs in the pudding coming soon. So that's where we're at.
There we go. Doug, it's great to talk with you as always, and I do appreciate you finding time for us.
Hey, pleasure. Anytime.
And good luck with In Play Oil. Done very well, stable, dividends, etc. Check it out. In Play Oil, Doug Bartole.
Thanks, Mike.